Hey everyone, and welcome back to the channel. Today, we're diving deep into a fascinating company that's quietly powering the pharmaceutical world, Veeva Systems, ticker symbol VEV. If you've ever wondered how life-saving drugs get from research to market, Veeva plays a massive role. It's a company at a really interesting crossroads, so let's break down what makes it tick, its financial muscle, and what the future holds. Visual, Veeva Systems logo, VEV ticker. Powering Pharma's digital transformation. On screen, Section 1. What exactly does Veeva do? Think of the life sciences industry, pharma companies, biotech firms. They're highly regulated, complex, and desperately need to innovate quickly. Veeva saw this need back in 2007 and decided to build specialized software, a cloud infrastructure, just for them. It's like they built a custom operating system specifically for drug development and commercialization. Visual. Simple animation showing drug development stages. Research-clinical trials-regulatory approval-sales and marketing. Text. Veeva, the life sciences cloud. Unlike general software companies, Veeva focuses on the entire lifecycle of a drug. They have three main areas. Development Cloud. This helps with all the nitty-gritty of research, clinical trials, and regulatory approvals. Imagine a single digital place where all clinical trial data, documents, and compliance checks live, making the whole process faster and less error-prone. Commercial Cloud. Once a drug is approved, this helps sales teams, marketing, and medical affairs engage with doctors and manage content. Data Cloud. This provides valuable insights into patient pathways and prescriber behavior, which helps companies make better strategic decisions. Visual. Icons for R&D, sales/marketing, data analysis appearing next to Development Cloud, Commercial Cloud, Data Cloud. Text. One of Veeva's most unique traits? They're a public benefit corporation, or PBC. This means they're legally committed to balancing shareholder interests with those of their customers, employees, and the broader life sciences industry. In a sector where trust and compliance are everything, this creates a massive, competitive moat, making them a highly trusted partner, not just another vendor. Visual, text. Public Benefit Corporation (PBC), with a scale balancing shareholders and customers/industry. Section 2. The Big Shift. Vault CRM. For a long time, Veeva's commercial cloud, especially its CRM, customer relationship management, tools for sales reps, was built on Salesforce's platform. This was a smart move early on. But now, in a major strategic pivot, Veeva is moving all those customers to its own proprietary platform called Vault CRM. Visual. Salesforce logo fading out, Veeva Vault logo fading in. Text. The Big Shift. From Salesforce to Vault CRM. Why is this a big deal? Well, their non-compete agreement with Salesforce expired. By owning the entire technology stack, Veeva can capture higher profits, innovate faster without waiting for Salesforce, and offer even deeper industry-specific solutions. This transition is a huge undertaking, expected to continue for years, but it's a massive move for Veeva's future. Visual, text. More control. Higher margins. Faster innovation. Section 3. Veeva's financial health. A quality investment now. Let's talk numbers. Veeva's financials are seriously impressive. They've shown remarkably consistent revenue growth, from about $1.5 billion in 2021 to a projected $3.1 billion by 2026. This consistent growth, even during tough economic times, highlights how critical their services are to pharma companies. Visual. Simple line graph showing Veeva's revenue growth over 5 years. Text. $1.5 billion, 2021, $3.1 billion, 2026. A huge chunk of their revenue, around 83%, comes from highly profitable, recurring subscription services. This gives them excellent visibility into their future earnings. They're also incredibly profitable, boasting a net margin of 26% in 2025, which is fantastic for a software company. Visual pie chart showing subscription services 83% and professional services 17%. Text. High margin recurring revenue. Here's another key point. Veeva is completely debt-free and sits on over $5 billion in cash. This makes them super resilient to economic shocks and gives them the financial firepower to invest in new technologies or make acquisitions without needing external funding. This is rare and a huge sign of financial quality. Visual text. Debt-free. $5 billion plus cash reserves. When you compare Veeva to its main competitor, IQVIA, you see a clear difference. While IQVIA is much larger, Veeva is a high-growth, high-margin software platform, whereas IQVIA is more of a diversified services and data giant with more debt. Section 4. No dividend. Why that's actually good for growth investors. If you're looking for dividend income, Veeva isn't your stock. They've never paid a dividend and don't plan to anytime soon. But for growth investors, this isn't a bad thing. Visual text. No dividend policy. Instead of paying out cash, Veeva reinvests heavily back into the business. They pour about 25% of their revenue into research and development, building the next generation of AI-powered applications. They're expanding globally, particularly in Asia, and looking for strategic acquisitions. This aggressive reinvestment is how high-growth companies create even more value for shareholders in the long run. Visual icons of light bulb, R&D, globe, global expansion, merging squares, M&A, appearing. Text. Reinvesting for future growth. Section 5. The competitive landscape. A three-way battle the market Veeva operates in is heating up. With the Salesforce non-compete expiring, it's becoming a three-way battle for the operating system of Pharma between Veeva, IQVIA, and now directly Salesforce with its own Life Sciences Cloud. Visual logos of Veeva, IQVIA, Salesforce on screen with arrows pointing to each other. Text. The battle for Pharma's OS. Veeva still holds the dominant market share in specialized pharma CRM, but Salesforce is a formidable opponent with its vast ecosystem. Veeva's defense? It's out-of-the-box, industry-specific functionality. While Salesforce is highly customizable, it often requires significant custom coding to meet strict pharma regulations, which Veeva already builds into its standard product, saving customers time and money. Section 6. Future growth and key risks. So, what's next for Veeva? Two big growth drivers. 1. AI integration. Veeva is launching Veeva AI across its platform. This isn't just generic AI. It's trained on industry-specific data to help sales reps streamline regulatory filings and identify safety signals faster. This could significantly boost efficiency in drug development. 2. Data cloud expansion. Veeva's Compass product is directly challenging IQVIA by providing modern, projected data on patient pathways and provider activity, offering a superior alternative to legacy data products. Visual AI symbol and data cloud symbol appearing next to text. Growth drivers, AI and data cloud. But there are risks. The 2030 migration traffic jam. Transitioning hundreds of pharma companies from Salesforce to Vault CRM is a massive undertaking. There's a risk of bottlenecks in implementation resources, potentially causing delays or customer dissatisfaction. Intensifying pricing pressure. As competition heats up, Veeva might face pricing pressure for the first time, which could impact its historically high margins. Visual traffic jam icon. Text. Risk, CRM migration challenges. Text. Risk, pricing pressure. Section 7. Final synthesis and investment outlook. Veeva Systems is a quality company with incredible financial strength, a debt-free balance sheet, and a dominant position in a critical industry. However, it's navigating a generational platform shift and facing its most intense competition ever. Visual, Veeva logo. Text. Strong company, strategic crossroads. For growth investors, Veeva is still a growth stock. Its reacceleration in revenue and upcoming AI initiatives provide exciting catalysts. For quality/long-term investors, the debt-free status, high margins, and PBC commitment make it a defensive play within tech, but the competitive landscape requires attention. For value/income investors, the high valuation and lack of a dividend make it unsuitable for these strategies. Visual, table showing growth positive, quality neutral to positive, value/income negative. In summary, Veeva continues to be a primary architect of the life sciences cloud. Its ability to successfully execute the Vault CRM migration and monetize its AI initiatives will be key to maintaining its premium valuation and market dominance through 2030 and beyond. What do you think about Veeva? Let us know in the comments below. Don't forget to like this video and subscribe for more in-depth analyses. See you next time.